Hi everyone, my name is Kent. I'm the founder and director of Vestyn Capital. Today, it's my honor to invite our chairman of credit committee, Mr. John Thomas, Mr. JT, to come over to share his insights. Thank you for coming, JT.
It's a pleasure, Ken. Always good to be with you.
That's great. Thank you. We have a few questions we would like to ask you about the market updates. All right. So first question is, as you know, the RBA has dropped down the cash rate to 0.1% historical low, along with $100 billion QE. So RBA predict the Australian GDP is expected to increase about 5% in 2021 and another 4% in 2022. So what's your view on this economic growth?
Well, Ken, firstly, it's good to see that a very conservative regulator is being so bullish with their predictions. I would love to see the RBA being right. I certainly agree that I think we're going to see some very good growth. 2021, my guess is maybe somewhere in 3.25%.
Yep.
2022, maybe 4%. But hey, if we only got those, Ken, it'd be great. If we get what the RBA is saying, it's even better.
Yes, that's great. Oh, that's cool. So the next question is, based on the Australian Financial Review newspapers, non-bank lending is currently booming, and it's expected to hit about $50 billion by 2024 because the major banks has cut back their commercial lending market. So what do you think about the main advantage of a non-bank in the current lending market?
Firstly, Ken, I think the prediction of lending 50 billion is well under the market. I think it well could be in the next 3 or 4 years, 200 billion. But anyway, the banks are a very important part of our economy, but they're really keeping to home loan lending. They've got a whole lot of other things to worry about. And so really the banks have pulled back, as it were, from commercial lending. That's opened up their market. And as you say, there is a whole lot of non-bank commercial lenders out there. Some new, some old, but all of them very keen for borrowers' business. And of course, coming out of COVID-19, small business, or SMEs as we call them, are all looking for money. And so the great news is SME borrowers can go. There's a smorgasbord of lenders. The businesses will do well. The lenders will do well. And overall, the economy will do well. Everybody's going to be a winner, Ken.
Yeah, great. All right. The next question is, as you know, we have been through the COVID-19 pandemic this year. And before the vaccine is approved to use in Australia, do you think those investors or the people that who has cash in banks would tend to have a more conservative view in their investments or financial decisions? And what's your opinion on this?
Ken, without being boastful, I think Australia and New Zealand have handled and dealt with the COVID pandemic better than anybody. Really, it started in very early April. Here we are 9 months later. No, it's not under control. It's not eradicated. It won't be until we get a vaccine. But in terms of dealing day to day with it, Australia is doing incredibly well. As we sit here again, America is pushing 200,000 new cases a day. Toronto is now in their second wave. Britain is in their second wave. Italy's having problem, and Asia's having problem. So I think we're now in that stage where we've got confidence that we can live with it, confidence that we can manage it, confidence that we can trace it. That all means that people are starting to do business, and investors are starting to look at their bank accounts and say, hey, I need to get a little bit more interest on this. And so I believe you're going to see a whole lot of activity in the next 6 months of people moving investments to higher yielding but safe investments.
Yeah, so that's correct. That's following with my next questions. With the rate cuts, after the rate cut, and people who has money in the cash, who has cash in the banks, because the interest rate has dropped in their savings account. And does that mean the money sitting in the banks in the savings account depreciating its values?
It does, Ken, and in a strange way, you're almost paying the bank to look after your money. Historically, if you put money in the bank, you get that back and you get some positive interest. With interest rates on term deposits probably going to sit around 0.5%, and if you add on inflation and everything else, you're probably going to get a real negative return of about 0.2%. So in fact, you're actually losing money putting your money into the bank. You need to look further afield, look for something with real estate security, say a mortgage income fund, where you could probably get net returns of anywhere between 5 to 8%.
Yeah, that's correct. And you mentioned about the negative returns. At the moment, Australia inflation rate is sitting about 3 to 4%. So it is a negative returns.
It is. Figures bounce around, but the inflation rate is high twos, probably going to be low threes. But anyway, you cut the cake, Ken. If you're getting 0.5% on your investment, you're actually losing money.
Yes, that's right. And I have another question that come up for myself as well. Is we have recently received a few inquiries from overseas or international investors about to invest into Australian property market, and as the ASIC predict that, and also a lot of newspaper predict that the property market will likely to grow or grow its values next year because the historical interest rate. And what do you think about this?
It's interesting, Ken, if I could go back a minute at the start of the pandemic. Sadly, all major commentators, all the banks were predicting property price falls this year of anywhere between 20 and 30%, and a couple of years before it even started to grow. I am on record as saying that I thought property prices may fall up to 5%, not across the board, but then they would pick up. Well, of course, property prices across the nation, if you average them, have fallen about 3.5%. And I fully support the banks and others' predictions now. They're generally talking of increases like in Sydney of about 9% next year, 7% for Melbourne, 11% for Brisbane and so on. And again, Ken, even if they were only half of that, it's still great. You wonder why people from overseas are investing in Australia? Because they can see our economy is not only stable, it's growing. They can see people getting back into employment, and they can see property and mortgages as a good investment. I say, Ken, bring it on, bring all their money, and we'll look after them for them.
Thank you very much. That's great. Thank you very much, JT, for your wonderful insights, and thanks for coming.
Always a pleasure, Ken. Look forward to seeing you next time. Thank you.